Good afternoon, everybody. We are live. It is Friday, the 10th of September, 2010. Let's go ahead and take a look at these markets. We had a pretty good week. The volume was, as expected, light here this week, but it did hold on to the gains very well. And here the volume's a little bit light. Maybe that's going to help. Let's see if that fixed it. But we held on to the gains, and the market came up to this 200-day moving average on a couple different occasions here. Well, the last 2 days, that is. And you can see that's where the 200-day, that's the black moving average, and the green is a 150-day moving average, which is also right there in the same spot as well. So we have a pretty impressive ability for this market to hold on to onto these gains. Next week, it's expected that the volume will be a lot heavier, and we'll see if that if the sellers show up in this area. But for now, I think as far as the week goes, we have to be impressed. Let's just take a look at it a little bit different without all those moving averages there. Here we've got just a 10, 20, and 50-day moving average. And looking at this, what I had drawn in this morning was a trend line off the tops from the April high to the August high as well. Looking at this a little bit further, I think that it's probably makes more sense to look at this trend line here, which really, I think, captures the essence of the trend, and that's really what we're trying to do with a trend line. It's not necessarily to say that the market's going to fall or at a certain point, or that the market will change trend suddenly just because of trend lines broken. But what we're seeing here is this market's kind of forming this triangle in here. And if next week we're to get a deeper pullback, if we held down near the 108 area, then I think it would be okay. In other words, if we got another pullback towards the midpoint of this range, and then we were able to break up out past that 113 level, that's really going to probably set the stage for a bigger year-end rally, because as we know on this weekly time frame, it's really been neutral here over the last several months. But again, we're looking at what's formed in here is this inverted head and shoulders pattern with that neckline up at that 113 level. So we'll continue to monitor that, of course, and looking to the shorter term time frames, we also have a trend line that really kind of represents the essence of trend here, and it flows pretty closely with that rising 5-day moving average. And as I always say, we want to give the benefit of the doubt to the buyers when we have a rising 5-day moving average. In other words, swing trades should generally be in the direction of the 5-day moving average. But the day trades, you can make money on the short side with day trades. So the point is, we have this pattern of higher highs and higher lows. We're getting resistance levels that break and then form as support. And right now we've got a little bit of resistance formed at about 111.70. That'll be important early next week. Looking back to the 5-day, 30-minute time frame rather, here we can see, again, here's that trend line, and it's the pace of the uptrend seems to be slowing a little bit. So if we break this trend line early next week, or even this one right here, then I think we'll get a test of that 5-day moving average. So keep an eye on that trend line early next week. But for now, we want to look at this market as innocent until proven guilty. We've got gains that are being held onto, and as long as this market can continue to hold on to these higher lows, then that's what's really going to be important. So 110.5, about 110.60 should be an important level early on next week, and then 109.50-ish. Looking at the 30-minute time frame, let's just kind of squeeze that together a little bit more. We can see that this level, that's about 110.5. And there's that 109.60 area. So those are important levels for this market, but still have to look at this market as we're coming up to the top end of that range, and that suggests caution. It's not a time to sell short because we're still above a rising 5-day moving average and making higher highs and higher lows. The biggest reason that I see for some concern in this market is the action in the semiconductors. They've really been unable to get back above this prior level of support. And this was basically, between 25.5 to 25.80 had been a support level that had been tested numerous times in here. And that support really, now we saw a test of it this week. It held as resistance. And on a closing basis, it's good that we held above this 25 level here. But when we look at the shorter term time frame, and here's that $25 level that, or actually it's $24.90, and that's the level I was emphasizing to subscribers that we could keep an eye on that. But this market is just it's not, the semiconductors are not behaving well, and that's something to keep our eyes on. It's below all these moving averages. All the moving averages are declining. We look at that weekly time frame, and it's a pretty ugly looking picture here. It looks like, realistically, here's stage 1 accumulation, stage 2 uptrend, and this looks like a big stage 3 distribution. If we get, start making some lower highs and lower lows on this weekly time frame, things could fall apart in the semiconductors pretty quick, and that obviously wouldn't be good for the Nasdaq. But the Nasdaq, the Nasdaq 100, the Qs here are holding up much better than you would have expected them to, or definitely better than I expected the Nasdaq to hold up in light of the weakness in the semiconductors. So I don't know if the semiconductors are going to get dragged up by the Nasdaq itself, or if the semiconductors are going to drag the Nasdaq down. But either way, trade each group, each market based on its own merits. Here's really what's the essence of trend for the Nasdaq. That is the post flash crash high. Combined with the high that we had seen in August. That trend line, we're right up against it. And, same thing here is that if we saw a pullback, I think 46 was an important level this week. It should be an important level going forward next week as well. When we look at the 200-day moving average here, we're above the 50, the 100, the 150, and the 200. The problem is they're all crossing back and forth and really giving us a bigger picture of indecision. If, however, we are to get this weekly time frame to kind of break this trend line in here and this horizontal resistance near about 47.80, then I think you could look at this as what's been this big rally, and then this being more of first we had a price correction, and it's really been correcting through time. So there is the possibility that going into the fourth quarter in a couple weeks that the buyers could regain control of this market, and we could see a nice year-end rally. It's not beyond the scope of reason, but obviously a lot of things are going to have to come into place, and we have to manage risk along the way. Here's a trend line that you could say is broken here today. Now, trend line breaks don't automatically mean that the market's going to reverse. As we know, it means the rate of ascent has slowed down, and we can see that here, that this market has kind of gone sideways a little bit, and a little bit of resistance forming up at about 46.70. But it is, a very solid week. Of course, we had, as expected, light volume, but it's really pretty close to the average of the last 20 days, and you can't look at the volume on the weekly and take it very seriously because we had a holiday shortened week. Of course, it was only 4 days, but we are getting up near the high end of this range. We've come pretty far pretty quickly. We know that a lot of the move last week really came, I think, at the expense of the short sellers, and this week I think now we're starting to see that maybe people are believing that rally a little bit more than they did last week when they're saying, oh, that was a bullshit rally, it was just a short squeeze, it's going to go right back down, and that sort of thing. The fact is, prices have held up, and I believe we're actually even positive for the year in the Nasdaq once again, which, I mean, it's kind of insane how we've been going back and forth above and below this, and basically that's where it closed last year, so that's the December 31st close right here. So we are positive for the year in the Nasdaq, and look how many times it's crossed above and below that positive to negative for the year. It's just been a pretty range-bound market. When you look at it from an overall percentage standpoint or something like that. But obviously we had a huge rally, we had a fearsome decline, and now we're just kind of in this range, but the intermediate term trend, again, we're above that rising 5-day moving average. The path of least resistance in the intermediate term is higher, but maybe turning a little bit more neutral. So that's something to be aware of, that if we start seeing the market break these important levels, such as 46, 46 was important resistance. Let's take a look at the 30-minute time frame. Let's actually look at 65 minutes. So we can see that going back a little bit further, that this 46 level has really kind of been a pretty good line of support that broke and acted as resistance on a couple of occasions. Now we want to see that the market will hold above that 46 level. I think is really what we want to look at. And looking at these 65-minute candles, you can see we've just got this real nice pattern of higher highs and higher lows. So the important level is, of course, up here. This is the more important level, 47.70-ish. And getting up through there, maybe that's what brings the big money back in, and we can see that this market could continue higher for the year. So Russell 2000 is really, it's holding on. It's holding on in an important area right in here, near about this 63.5. This was prior support, which was resistance on the daily time frame. We look at the longer-term moving averages. We are trapped under here, underneath this 200-day moving average as well. So that's obviously reason for concern, but it's not reason to get bearish unless we start breaking this, this basically the 63 level. Breaking below and holding below that 63 level for maybe more than a half hour or so, then we could see this market, I think, drift down to a couple of these levels. First of all, we'd expect maybe about that I didn't draw that properly, but this level right here at about 62.40, 62.45, and then down near about 61.70. So this 63 area is the key level, I think, going forward for next week. That's a big level, and you can see that similarly we have this prior support, which is basically acting as resistance, and it's further its further significance comes from the fact that this is also where we have that 200-day moving average. So breaking below and holding below that 63 level, just below we have that 60, and probably 62.75, I would say, because that's really where we have that 50-day moving average as well. Below 62.75 and holding below there, that would be reason, I think, for maybe a little bit more concern. We have, you could look at the trend lines in here and say off the year high, that's the trend line we're looking at, or we could look at, we could call this the essence of trend because it's really kind of adhering to this a little bit better. And so we have these, three things that are coming together here. We've got the 200-day moving average, we've got this trend line, and we have this this prior bigger level of support now acting as resistance as well. So this level becomes a level of focus for a lot more people, and that's why we have to just wait until the market gives us more evidence. But back below 62.75, then I think you're going to see a little bit deeper pullback in the Russell, and at that point it might make sense for some short-term, at least, short sales. But we've held the 38.2% retracement of the rally from March of 09, and this could be just a time correction in here as well. So I don't think it makes sense to be dramatically bullish or bearish in here. I think it's best to stay focused on individual names. I've been talking about, last week I was talking about these healthcare stocks like Humana has broken some nice resistance on the weekly time frame. Here on the daily time frame, you can see nice movement in there. It's above this rising 5-day moving average on Humana. We were talking about last night about Rax Systems. Here's a great breakout. And if you just stay focused on these nicer looking charts where we have, even in here, this Rax we were talking about, is this an inverted head and shoulders pattern? Well, an inverted head and shoulders pattern, if you look at the definition, it's a reversal pattern. But, the point is you see these patterns, and it's not necessarily pattern recognition that's important, but what's the psychology? The psychology is the buyers were getting more aggressive by taking control at these successively higher levels, and they were hitting this resistance on a more repeated basis, so that increases the likelihood of a nice move like we saw today. I'd mentioned on Twitter a couple stocks like Volcano Corp, VOLC. It's got a great looking, I can't find a time frame that doesn't look good here. Look at this monthly time frame. This is
their all-time chart. But this resistance back in 2007 has been holding as support. We look at that on the weekly time frame. You can see it just kind of traded in this this triangle really, and it seems as though the stock is starting to move out of there now, and we can see that it's not quite broken out, but you can anticipate these because we had seen a heavy volume move in here, followed by a lighter volume on this little consolidation. And I tweeted about it basically right here at this point, saying that it looks ready to erupt. And here's where we had trend alignment. Here's where we had this stage 2 uptrend. Then we had distribution that turned out to be just a correction through time rather than price. And here's where we have the resumption of that stage 2 uptrend on the short-term time frame to put it in alignment with the daily and the weekly time frames. The other one that I'd mentioned was this ID. And ID is a little company that it's got a great looking weekly chart here. And you look at this weekly chart, it really looks like it has a lot of room to run. Now, I think it's a newsy stock. I don't really follow the news on it, but I think there's been a lot of news in this stock. It has these movements, and then they've been failing, is what I was mentioning. But and here we can see that on the 30-minute time frame. Big rally, fails quickly. Gaps up, fails. Gapped up and ran quick and then failed. But this afternoon, where I was mentioning it in here, was right in this area, right near the daily R2. That it was, it seemed like it was holding on to the gains better than it has previously. So there was a nice little afternoon push in that stock as well. And the key is to stay focused on the names that are, that make sense. Whether it's, looking at shares of Netflix and saying, it's at all-time highs and has great momentum, or stocks like Priceline, or if it's a cheap little stock that was pointed out to me, is this Chelsea Therapeutics. I have no idea what these guys do. It sounds like a little biotech play, but what we have here is a decent looking weekly chart that if it breaks past this level, maybe it's going to get going. I have no idea what the news is, and it's a biotech, so be careful with it if you decide to get involved. But big volume in here today is consolidated, made these little higher lows above that rising 20-day moving average, and is holding on to these gains in here. So maybe that's one to keep an eye on for next week, above 4 and a dime, or then clearing these levels up near 450 would really bring about, I think, a bigger sustained momentum move in this one. So if we take a look also at let's see, the gold stocks, they've been up here hitting at these highs, and you can say that the GDX, here's a handle and here's a cup. Well, what about, I thought they're called cups and handles. Well, who cares what you call it? The fact is, we have resistance up at this level. We have a higher low, and we have now all these moving averages rising. We look to the weekly time frame, and these gold mining stocks really look like they're ready to maybe make a bigger, more sustained move. And this is basically, for the GDX at least, all-time highs. And there's a lot of Agnico Eagle that's consolidating up here in a pretty good area for maybe it's going to get up towards the mid-70s again. American Barrick, similar here on this weekly time frame. We've got these higher lows. We have, these, call that a cup and a handle or whatever the heck you want to call it, is irrelevant. But it's hitting up against these highs. It's pulled back a little bit, so maybe next week above 46.30, 46 and a half. Even like Newmont Mining is holding on to its gains up near these highs, which are basically all-time highs as well. So the gold miners are a group that looks good. What I failed to mention, actually, and I wanted to talk about as well, is the financials. The financials have held up a lot better than most people expected them to, as have the home builders. The home builders reported, really horrible news on this day a couple weeks ago, and it's been up since then, and it's holding on to these gains, and it looks like it's in this, at least forming a nice base. I wouldn't get bullish on the home builders here, but maybe they make them run up towards that $16 level. You've got to look at what the stocks are telling us, not what we believe, the value of the banks or whatever is. But the financials have held on to their gains here. They're still below the 200-day moving average, the 100-day, the 150-day moving average. But when we look at it, we're still same thing. We've had a range, in these financials that is basically 1340 up to 1510, and we're approaching the high end of that range. We are still above that rising 5-day moving average, but the 5-day moving average, you can see, is starting to flatten out a little bit, and we're turning a little bit more neutral. So it means, heads up, be aware that maybe breaking this first level of 1440, this prior resistance, which held as support yesterday, maybe breaking that level, well, it puts us below that 5-day moving average, and if we stayed trapped under that 5-day moving average, then we're likely to have a couple days of weakness, I think, in the financials. But for now, they're holding up within this range, and next week is always, every week, every time we have a next week, it's always an important week, and next week is going to be no different. So it's always the same guys asking for questions. That's smart, but Going Mackay wants me to take a look at Medco Health. It's in a downtrend. It's below the declining 10, 20, 30, 40 week moving average. On a weekly time frame, it's in a downtrend, guilty till proven innocent. On a daily time frame, maybe you get it up to the declining 50-day moving average, but if you're looking at healthcare stocks, why not look at United Healthcare? Or not United Healthcare, but I mean Humana, or what's the other one? There was another one on my list. I forgot the name of it right now. But go with the leaders. Don't look at this, basically garbage that's, coming up off the bottom. It's most likely not a rally that's going to hold. If you're long the stock, from near term, then you look at it and say, well, here's where the intermediate term went higher, and we have this pattern of higher highs and higher lows. If you're involved in this rally, protect your gains, because they will most likely not continue to hold on. So that's the only stocks that I see right now that anyone's asked, and it's 20 after. So hope everyone had a great week of trading, and we'll do this again next Wednesday and Friday again. So thanks for tuning in. Have a great weekend, and hope you trade well next week also.